Hey guys, welcome back, and in today's video we're going to be discussing Newbank, which is actually the fastest growing neobank in the world. Now first, let's get a quick introduction to what Newbank does. Now they're a bank that is similar to SoFi within the US, where they provide banking and credit services to their customers. Now Newbank operates in Latin America, and they operate within Brazil mainly, but have just expanded into Mexico and Colombia. And this is kind of a graph of what's really been going on within their business throughout their history. And as we can see in this, they have had some tremendous growth since 2020, seeing that they've grown to over 80 million customers at a very rapid rate across all their different markets. Now, before we dive deeper into their numbers, the three main reasons I see an opportunity in Newbank is because of their growth in profits and revenue, total addressable market, and their operating leverage. Now let's first start off with their growth. Newbank is valued at quite a premium right now, with a price-to-book ratio of 6.28, while the industry sits under 1 at 0.97. Now this is for a good reason, as they are growing revenues at 87% over the trailing 12 months, as seen in this graph right here. This growth stems from their expansion throughout Latin America, starting in Brazil, while also expanding into other markets like Colombia and Mexico. And one of the really unique things is that they've shown their expertise in marketing their product. With every new market they enter, they seem to be gaining faster and faster traction, demonstrating that they have learned what works and what doesn't work in Brazil, and this knowledge translates directly into better metrics for their new markets that they enter. Now they've witnessed promising traction with their digital banking products within those markets, with Mexico gaining 1 million users in just 1 month since its launch. Now, growing revenue at 87% is very exciting, especially since they have low overhead costs and can onboard customers without incurring any large fees. And while rapid growing revenue is exciting, it means nothing to investors unless there are profits accompanying it. Now, not only does their revenue grow from gaining new customers, but they also continue to further monetize their existing customer base, driving up their RPAC, which is the average revenue per active customer. Now, not only does their revenue grow from gaining new customers, but they also continue to further monetize their existing customers, driving up their RPAC, which is their average revenue per active customer. Now, as we can see, Newbank's customers remain with them, but also increasingly ingrain themselves within the ecosystem, which increases spending, investing, deposits, and more, driving up their revenue per customer drastically. Now, this graph and this statistic is important because at some point, markets become saturated, and you need to find ways to monetize your existing customers more. Now, seeing them do this as they are still growing their customer count is very promising. And we can see here in this graph with people who have been with the company for a certain amount of months and their average revenue going up over time. So if you've been with the company for over 53 months, you're generating nearly $20 in revenue for the company. And if you've been with them for 13 to 17 months, you're kind of hovering around that $6 to $7 range. But we can see over time, this tends to trend up quite steeply as you get deeper and deeper ingrained into their systems. Now, moving on to their addressable market, the reason fintech is such an attractive opportunity right now is because of the massive addressable market that is available for these companies to capture. Now, with companies like Newbank and SoFi going after the bigger banks, while payments are being captured by the likes of Cash App, PayPal, and Stripe. Now, the financial technology industry is also expected to grow 2 to 3 times the size of what it is today by 2030, which means the companies that offer the best prices and operate at scale will be able to capture the large slice of that growing pie. Now, Newbank's current opportunity lies within these countries we see right here, and these are the ones that they serve. As you can see from the diagram above, they have captured a significant share of Brazil's adult population. However, they have just started to grow their customer base in Mexico and Colombia, so there's plenty of room to expand within those countries. Now, this expansion into other markets has shown similar metrics to the growth in Brazil, which has been quite rapid over the past 5 years. And if they continue to expand into new markets outside of Latin America, it could present even more growth potential in the future. Now, another important thing to note concerning Newbank's addressable market is that Mexico, along with other Latin America countries, is witnessing companies like Tesla and others establishing manufacturing facilities and creating jobs within those jurisdictions, which will lead to an increased wealth and higher paying jobs for their citizens. And given Newbank's rapid growth in Mexico as one of the best banks for consumers, it is almost certain that this influx of better jobs will benefit their business, whether through increasing spending, investing, or loan products. And moving on to the third portion of operating leverage. Now, one of the things I think is so special about Newbank is their operating leverage. And while the growth in revenue, profit, and market size is important, Newbank's real strength lies in their small customer acquisition cost and their operating leverage, which allows them to acquire customers inexpensively and scale their business rapidly without increasing costs. This graphic right here shows why Newbank is top of class in terms of operational excellence. And as shown here, the cost to acquire a customer is $6.50, which is drastically lower than other banks that can range anywhere from $80 to $300. Now, this is crucial to the investment thesis in Newbank because their low customer acquisition cost means that their break-even point on acquiring a customer is extremely short when compared to their competitors, further building their moat as a financial institution. We also see this top-tier cost control in this graph, where we have the RPAC, the average revenue per active customer, and cost of service metrics overlaid each other. And we can observe that although they are generating more revenue per active customer, they're not spending as much money to make that happen, which demonstrates the superior operating leverage Newbank has when growing their business. And this is a really important metric because it shows that, theoretically, of course, they could acquire hundreds of millions of customers and maintain the same amount of costs per customer, keeping margins steady while generating large amounts of free cash flow. Now, the last piece to the puzzle is the valuation. And it's clear to most investors that this business has excellent characteristics. And that is why they have such a high valuation, at over a 6 times price to book ratio and a forward PE of 58. And although Newbank is trading at a premium valuation, I believe investors are underestimating the exponential effects of a growing serviceable addressable market, RPAC, customer count, and increase in wealth within these markets that they operate in. And these four factors all growing exponentially makes this company worth the valuation, in my opinion, over the next 3 to 5 years. Now, although it seems like all rainbows and sunshine, it's important to note that although this company is firing on all cylinders right now, if there's even the slightest falter in that belief by the market, this stock could tank drastically due to its higher valuation, and a lot of this good characteristics and qualities being baked into the price already. Now, this investment does have a decent amount of risk. This company does have a decent amount of risk given its high valuation, and it was far more attractive a few months ago when it was nearly half the price. However, over time, I do think it will continue to outperform the market with the way they have been operating over the past few years. Now, in conclusion, fintech is going to be a growing industry for the decade to come. And one of the best ways to beat the market is to invest in companies that are not only growing market share within their industry, but are also within a sector that is growing rapidly. That way, even if they do lose a little bit of market share, the pie is increasing so large and so quickly that it doesn't really matter, and they will continue to create more and more value for shareholders. And with fintech, I believe you have both of those going for it. With all these payments moving online to a more leaner, faster system, and Newbank being at the tip of the spear in that category. And there's also plenty of other companies that are leading the fintech movement and online payments, like PayPal, Block, which has Cash App, PayPal has Venmo, and you also have SoFi. So do your research, find out what you think will happen with these companies and which ones will outperform and underperform, and make an investment decision for yourself. And with that, that's all I have for you in this one. So thanks for watching and have a good one.